You know, structurally on chain it's not a bear market set up, even though I would say we're at peak fear, like no doubt about it. People are really scared, which typically is a time to, like it's an opportunity to buy. In a 1-hour interview with What Bitcoin Did posted on January 29, 2022, analyst Willy Woo, best known for his on-chain analysis, discussed a diverse set of topics such as altcoins, NFTs, Bitcoin ETFs and futures. And while it's always great to hear Willy's thoughts on anything related to crypto, the topic always comes back to Bitcoin. For the on-chain analyst, at the time of writing, Bitcoin is currently trading at $37,500, and many want to know if we are in a bear market or just trading sideways before the run-up. Some analysts believe that the bears have taken control of the market, and the fears surrounding Bitcoin makes for a strong argument that we might just be in a bear market. Willy Woo acknowledges that Bitcoin is at peak fear, but despite this he still believes this is not the setup for a bear market. Willy explains that there are too many strong metrics that contradict a bear market. He suggests that from the surface it might look as if we are close to a bear market, but if we dig a little deeper and look at the key metrics, the data suggests otherwise. Listen to his analysis. Every time we've seen long-term holders holding most of the coins, it's structurally set up for it to run upwards. Bear markets happen when everyone who's holding the coins are noobs. And when you say like long-term versus noobs, it's basically how long are those coins been aged in a wallet. So if you look across all the wallets on the blockchain and then you go look, how old are these coins before they move? How long have they been sitting in these wallets? It goes through cycles, and these cycles where most of the coins have been sitting there for more than 5 months. It's a very strong setup, which is what we've got now. It's at peak levels of these coins. The coins across all of the network have been sitting there, most of them for more than 5 months, and people who do that, they've held on for 5 months. They're not selling at a loss. They will sell when these profit be ahead, and you'll see that whenever it breaks out of like all-time highs and does a really strong rally, those guys have been holding 5 months start to take the money, and they take cash that's available. They cash out, they take the profit, and eventually new guys that are coming in to buy the rally, they are the new guys, and they want to get rich. But what typically happens is it's very vulnerable to a bear market because some of them sell right. They sell like the 2018 bear was at peak, new guys holding the coins, and the cycle repeats. Those you guys either sell, or the ones that don't become hardened hodlers and they sell on next rally when it goes even higher. So it's just like old hands are out, new hands become old hands, and it's back and forth, and we're in the old hands situation. We went rallying from 30,000 to 69, and we did see a little bit of sell down from those 5-month-old holders, and they took some profit. And then as it sort of crashed down, they'd say slide, it wasn't a crash, it was slid down. They lo and behold, around about 40,000 micrometer low 40s, they just stopped selling. They've stopped selling for actually a number of weeks now, and actually they're now, you could say, they're accumulating, or in other words, some of the new guys have sort of aged to the 5-month zone and they're becoming old hands. So those guys as an equilibrium, that cohort is now gaining, and so it's actually strengthening again. So it's not, you don't sort of slide it and then capitulate. With weekend we've come down from 69 to 33, and I'd be hard pressed to capitulate from 33 down to say 20, because that's like retracing something like a 2018 bear market over 2.5 months instead of a year, right? Anyway, structurally it's very, very strong, and demand started to come back in. The hodlers that were slightly being dispirited by the futures traders selling down have stopped selling. They're rebounding now, and there's accumulation coming. The whales are now and when I say whales, these are guys with more than 1,000 bitcoins. They are starting to flick over to buying right there. They peaked their selling in December, so you could say institutions were selling down in December, which is kind of a part of their normal cycle. They sell down, they redeploy in January. Looks like that started. The whales are coming in. The futures coming off the CME and ETF and all the other futures exchanges, but I primarily think that the CME and this futures that drives a lot of this now. That demand started to come in. It started coming in a few days ago. like most of this demand started to come in, and for weeks on end it was just toxic. There was just no demand. It was like divestment. So like it seems pretty cheap right now. To watch the full video, check out the link in the description. What do you think of Willy Woo's analysis? Comment below, and thanks for watching. We'll see you in the next video.